Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for June the 1st, 2011. Now our first position for tonight is going to be in the July lumber futures contracts. Now what we're looking at here is we're seeing some momentum being pushed to the upside. These type of setups are ones that I look for. Now we've closed the day at 243.50. We've got our three predicted moving averages, which are now acting as support: 239.80, 234.70, and 238. So we can see that we've got our predicted moving averages all stacking on top of each other, which is and then closing above that again is it can be interpreted as very bullish. Now what I also like here, our predicted short, medium, and long-term differences are breaking above the zero line, and our predicted MACD and our predicted true strength indicator have crossed the trigger to the upside, and again this is showing that momentum to the upside is building. Now we've had a big sell-off in these contracts, so this recovery may be corrective in nature, but either way there's some pretty decent opportunity here. Now what I also want to do is go in and look at the short, medium, and long-term crossovers. Now looking at this, we can see our short-term crossover is again bullish. Our medium-term crossover, we've crossed the trigger to the upside, which again is also bullish. And our long-term crossover, it's crossing the trigger, but it's got a little bit of work left to do. We can see we've got 231.90 on the 15-day SMA, and then we have 235.30 on the 6-day predicted EMA, which has just crossed that trigger. So this trade definitely looks like a good one. It's got some decent momentum. Now what we're going to do here is we're going to go into the daily report from Vantage Point, and we're again going to try and fine-tune that entry point. Now for tomorrow we can see that excuse me, our predicted low is 240.60, our predicted high is 249.70. So 240.60 will act as our pivot support to get into our long positions. We know that we've got some pretty strong support building in that 238 area, so anywhere above 238 looks good. 240.60, that's the predicted low. Now checking on the Vantage Point predicted high and predicted low to easily assess how accurate that's been, we can actually put that right onto our screen, and I like to do that. I often like to do that because this is what's called a high-low break. Is it breaking to the low, or is it breaking to the high? You can see here we've had three consistent days where the market is broke above the Vantage Point predicted moving average. That's indicated by this red line. Our black line is our predicted low. We're nowhere near those predicted lows. So momentum is clearly gaining on this particular futures contract. So that's our first position for tonight. Now our second position for tonight is going to be in the Forex market, specifically the US-Canadian pair. Now this trade here, in my opinion, is somewhat higher risk. We're gonna stay with the primary trend, which is down. We can see that our predicted MACD is just crossing over the trigger to the downside in heavily overbought territory. Our predicted true strength indicator, same thing. Now point of interest here, our predicted short, medium, and long-term differences. You can see the steep downward angle that this is pointing on. Now my concern here is that the triple EMA cross has not completed. We have pushed lower. Some of this is based around fundamentals, specifically the Bank of Canada statement today. They left the interest rates alone, but they said they're getting ready to remove the stimulus, which is it's essentially being taken by the market is very bearish, or very bullish for the Canadian dollar, excuse me. So what we want to do here is identify some support / resistance. Where are we with this particular thing? 97.05, 97.35, and 97.24 with a close of 96.88. So in the same theory, much like looking at the lumber contracts in reverse, this is a bearish setup to it. So let's have a quick look at these crossovers from Vantage Point. Now we have the predicted short-term crossover is clearly sending a signal to the downside. Our medium-term crossover has just crossed over the trigger to the downside. Again, you can see we've got 97.44 on the 10-day SMA, and then we have 97.30. So we've just barely crossed. That medium-term crossover is very fresh, and of course our long-term crossover has not crossed. So in my opinion, the short is with the primary trend, but is also carries some risk here. So what we want to do is, again, go into the daily report now and see if we can fine-tune this entry point here and then stay with what we anticipate are the leading indicators for this next move. Now for tomorrow, you can see that we have 97.07 and 96.37 is the low. I think we may push a little bit higher than 97.07. So your aggressive traders can get in short at 97.07. Your less aggressive traders, I would look between the 97.24 and 97.45 area. That's where I would suggest for less aggressive traders. And then our target for tomorrow is 96.37. Now, the thing with Forex is it's kind of an interesting market, because very often what you'll find with this particular market is tomorrow will be the same as today with a slight extension of the same range. So if we take that into consideration, we can see that the high was 97.71 and the low was 97.65. So if we take that theory about tomorrow being the same as today with a slight extension of the exact same range, then our high wouldn't be as high and our low would be slightly lower. I don't anticipate a full-out breakout here on U.S. Canada to either the top or the bottom. I think it's going to continue to play in the range between 97, between about 98 and 95. So we're just going to play that range for now. And the primary trend, to be clear, is still down. So for now, we're going to sell into strength and stay with the primary trend. But again, it is, in my opinion, my respectful opinion only, shorts still carry a higher risk even with the weakness in the US dollar, because again, the Canadian dollar and the Canadian economy relies heavily on the US economy. So when the US dollar is getting beat up across the board, in many cases, like last week, so is the Canadian dollar. So we want to definitely keep that in mind. So with that said, these are the market positions for June the 1st, 2011. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.